Okay. So before I reveal how the market actually moves, we are going to take a look at the executions from today. I mean, if you want to talk about precision right here, loading up, picking pretty much the low of the day. Yeah, it was the low of the day. Bought the low of the day. Um, and you'll see what this line is up here. Loading buys, 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 scaling out as we're moving up. And you'll see, you're going to say, why didn't you hold the trend all the way up to the top? Because this is how it works. You want to talk about probabilities and really having edge to the market. You don't have to hold these Superman holds. Yeah, I should have held a runner, but there's no point. This is consistency right here. Getting this move here in 9:40 to 10 o'clock, 20 minutes. What did we make today? $2,629. Started this account with 3,000. Um, this consistency, we'll take a look at the other trade we took today, which was on gold. We try to get this continuation higher here, getting in the breakout. We see that the buyers did not want to step up in this area. We sell here. We're not looking to take a short here, and we'll break down why we're not looking to take a short here. The probabilities are not on our side, but we got out of that trade early. Cut these losers early. We're not sitting here holding and holding and holding. We made money on this trade. We bought here and we sold here. I mean, it was a small profit. What did we get on crude oil today? That was another trade that we took short today. Okay. Accidentally bought when I meant to sell. I think my stop got moved or something, but this is where we're loading up our position, and this is where we're getting out. This was another thing. I wanted to hold through this level here. You know, this is a good piece of the pie here. I wanted to hold through this level, and I accidentally, because I forgot that I was shorting, I tried to take some partials and I accidentally added to my position. So I just immediately close it. I mean, it would have been a massive winner here if we had added here and just held it, but there's no reason in breaking rules like that. You can see, right, why we got into this crude oil trade. And it all stems from the same thing. You're going to see these white boxes up here, and it's going to be the range. Look at yesterday's trade. Look at yesterday's trade, and we're going to get into it. Selling up in here and closing our position down here. We took some partials at this point, added to the position when we continued going lower. I mean, massive move. That's how we got this. We started the account yesterday at 3,000. We're at 5,629. Um, Bitcoin, I think Bitcoin yesterday, Bitcoin had a great move today. I really wanted to take part in this trade. Um, yeah, we had a lot of executions on Bitcoin yesterday. We got chopped up here, but as you can see in the meat here, we're shorting, covering some, but eventually getting that down move here. We're on the right side. We're not, once this occurs, we're out of the trade and we're good. We're not getting chopped up in all of this. So we've flipped it and we're continuously on the right side of the market as opposed to the wrong side. I want to bring up Hydra's trade real quick. This is the typical ICT trader. The market is continuously pushing up. This was NQ, the worst future to have traded today. And as you can see, if you take a look at ES, this is why ICT has cooked the brains of every single trader. ES is obviously the one that leads. At no point should you be looking to go short in this area here. There might be profit taking, which is what this was in this area here that he was looking at, but there's no point in going short, and we'll get into why there's no point in going short. Like, that's literally just, not only is it a gamble, it's worse than 50-50 for your odds considering where we were in the range. So that's going to be the key word that we talk about, but I want to kind of make this video a little brief. Talking about range and things like that. So let's go ahead and get rid of this. And the first thing we're going to look at is how we're going to be reading the market. And the basics of the market is you have fair value. And if you can train your mind to see it as this, obviously on this 4-hour chart, it's easy to see. Okay. If I were to draw the box like this, okay, we can see, and this is the sauce right here. We can see that we are staying in this area here. Okay, now what fair market value is where 70% of the trading volume occurred. So what's going to happen is, the way I'm drawing my box here is, we're going to see some pops above an area and we're going to see some pops below, but 70% is going to be in this meat right here. And I've already trained my eye to see this, right? So I'm going to go ahead and draw this right here, and we can see some pops above, we can see some pops below. Now we have this tool called the volume profile, which shows us, okay, it's going to plot with a bell curve where that volume is, along with the value area high, value area low. When people talk about buying high and selling low, you think, okay, well, if we were to look at this, this seems very high compared to here, compared to this area here. I need to wait for a discounted price below here. That's wrong. The range that we're in right now is fair market, so it's buying high and buying low, or selling low. In comparison to where we're trading at right now, where is fair market at the time? Okay, so if I take the fixed volume profile and we extend this over, okay, right here, okay, my box was pretty close, we're a little higher. This is where fair market value is, right here, right here, okay. And the biggest meat was traded in this here, right across here, okay. So what this tells us is, every time that we get above, right, we are looking, once we get outside of this zone, that's the inefficiency right there. It's not a fair value gap. This is the inefficiency. We're most likely, right, 70% chance that we're going to go trade back into this area here. Okay, so if you can fade the extremes and trade the mean reversion and not get caught up in this area here, right, all inside of here, and you're going to say, well, that's most of the time, so how are you not going to get caught up in there? You're going to have no trades. One of two options: A, you trade a different future. So we are looking at Bitcoin, crude oil, the Russell, we have the Dow, and we have gold. We have all these options. And if you're telling me that all of them are inside of the range, then you know what? You're not trading that day or that week. Okay, it's just that simple. And you're not going to miss a lot of trades like that. You can fade these extremes. Okay, now what happens is, when you go to a smaller time frame, okay, so this is clearly a big range, a big broad time frame. Inside, just like these boxes here, you have smaller ranges, and as you can already see, you can already be looking, once we start to escape these ranges that we're in and we begin to hold above, we are going to now discover higher prices. Okay, that doesn't mean that we're going to move from here up to here, and what it also means is that we're not going to be respecting these levels to a tick. So we're not looking at these levels as bounce plays. It's just areas where we're now seeing that the market has shifted, and this is now our zone. So if we're looking at this here, right, we create a new area here, right here, fading the extreme. That could be a long position right there. I see that it's overnight, but that's what you're looking for, these pops below. And really, it would probably look like this right here. So you have all these short trades, right, back into the zone, longs, longs. This looks like a really good trade here, you know, right into the zone. And you'll see how this lines up. Same with this. And what you can do is, when you're on this, you're taking the fixed volume profile from here. We're going to drop down to the hour for this example so we can see where we began to stall out to here, and we're not going to extend it to the right. We just want to see this price, and this is our zone here. This is where our fair value is. Now, the next indication of higher prices is compression, okay? We are not getting faked out in this area here because we did not compress. And by compress, I mean get into this wedge box shape, okay? This is a nice, tight compression. Look at the price getting like that. We're not whipsawing like this. This is a whipsaw right here. This was a pop and fade. Look at this. The same way that you're fading these extremes up here, fading them back into the range, we can, on an intraday basis, fade back into the range here. And I'll show you how I did that. We see that price is now escaping the range. We're going higher. We're compressing. We want to see how price holds up here. If we can continue going higher, we'll probably see us go to value area high. Are we looking to long right here in this area? No, we can. We could be popping above to go higher, but the probabilities are not on our side. Why take that trade when you can look at something like crude oil that is playing out beautifully and you can just sit out of that, okay? No reason to do that. So if you can train your eye to see these ranges, like that, this is how it works. This is how the people make their money. They continuously fade the extremes and allow price to show them if we're continuing higher or not, okay? So we're about to look on MES and it's going to be extremely, extremely clear, okay? So as you can see here, and we'll go back, we won't extend right so you can truly see. We today, let's talk about how we got to the point we're at right here, okay? So if we turn off market replay, we are here. And we can clearly see value area high, value area low. So when I draw this area here, we are now near the bottom of value area low. We have all this volume right here, okay? I'll make note of this in a second. What we see here is we had a range and we pushed lower. And we had a range. Now what could happen? One of two things. Range and push lower, range and push higher, okay? So if we want to see, and it's not going to obviously be in one day where we sit in a range and then dump, and then sit in a range and then dump. It might look like this. We create a range, we fake it up here, we return to the range, and then what do we see at this point here? We see people accepting lower prices, okay? Nobody wants to bid this thing higher. And the misconception is that this market is just some, computerized algorithm. If you had a shoe priced at 200, okay? By the way, this is supply and demand. Not whatever, we had a big movement here, so when we return, we're going to extend this over and look for a bounce. That's not supply and demand. This is supply and demand. We have a shoe price at 200, and that's retail value, and we have 30 people wanting to buy the shoe at 200. Obviously, above that, we're going to have people who at 190, we're going to have 10 people, we're going to have 20 people want to buy the shoe at 190, and at 210, we're going to have 20 people wanting to buy the shoe, okay? So we're going to fluctuate. We're going to continue to bounce back and forth, and some people are going to be more greedy than the others, and they're not going to wait for price, but we're pretty much going to sit in this range, and this is going to be the fair market, okay? Now, what's going to happen is sometimes people are going to just want to go ahead and dump the shoe. They're not going to wait for a seller, and they're just going to sell their shoe for, let's say, 180, okay? And we might have a sale up there, but that was an outlier, and we're immediately going to bounce back into this range, okay? Now, this is the kind of stuff we're looking at in the market. It's the same thing, okay? We're going to pop up there. Someone just didn't want to be patient enough to wait for someone to buy it at 200. They just want to offload it and they'll eat the cost. But then we return back to the range. Now what happens if all of a sudden, two people, we have two people who want to sell it at 180. And this should be the opposite way, because the higher prices would be up, but just bear with me. Yeah, this is completely flip-flopped. We have two people. Price is going to come here, and then we're going to come back to 190. But what's going to happen is people are going to start realizing that they're selling it for cheaper. I know this is opposite. I should have done it the opposite way. Just stay with me in this area, and we're accepting the prices in this area right here. This is now where people are going to fear and greed steps in, and more people are going to start selling it for 180. We're going to flip these numbers just so people don't get confused. Yeah, I should have done that a different way. But anyway, and price ends up going higher and higher and higher because people are realizing, oh, the worth is 210, and more people want to buy it, and this turns to 215, 220, 230, and people are like, wow, this is valuable. People are going to, but eventually, the greed steps in, and that doesn't last forever, but you can catch that run up here, and it comes from the compression, and it happens the same way on the charts. Okay, so right here, this was the pop. So this would be like, for example, this would be the 200, or this is the 200 right here. We're selling it for 200, and then all of a sudden people are buying it at 205, 210. Someone wants to buy it for 250 because they think it's a really nice shoe and whatever, and we immediately snap back into the range. Nobody else thought that the value was there for there. We came back into the range, and more people are seeing two things happen at this point. They realized that the worth, no one wanted it up in this area here. It was too expensive, so we'll see down here. And more people are saying, this is worth it, this is worth it. Look at the compression we get here at the bottom of this range. The bottom of this range here, this is where 70% was traded. We get the compression, and we finally end up breaking and going lower. Okay, yes, that happened overnight, but the trades happen all the time. Like, that's that. And it I don't even know how to explain it. We're at the top of this range. We're at the top of this range, accepting price lower here, and we end up pushing lower. Okay, so at this point here, we had range, push lower. Now we have another range. So what we're going to do is we're going to see, okay, where's fair market value? Well, how do you find fair market value? You slap the fixed range profile on, and now we have our fair market value. Okay. We have our fair market value. We tried to go above once, we failed. Every time we tried to push lower, we couldn't do it. We held value area low of the higher time frame range, right? Okay. And now, just like the chart up here, if I move this here, oh man, let me move everything. And I know the numbers are in the way. But this is what we're looking for right here. Look at the range. We're getting above it, and we want to hold and pop above. And I know what you're thinking, because I used to think the same thing. Well, how do you not get caught long at this point right here? Okay, number one, this range was it's not big enough. I mean, it could be, but it's not big enough. You have to understand that we're gonna have a pop and drop. Okay, like we're gonna 70% is in this area here, so we're not looking for the first break above. Okay, we're expecting that it's gonna reverse. Same thing right here. Like, we're not looking to get the short at this point here to go lower. This is not that high of a probability because we're at value area low. Same thing with this. Like, we're not getting caught in this compression here to go lower when we have our range developed here. Okay, so the second key is more valuable. I'm not the best explainer. What do we notice at this point here? There's something weird about this chart. Not weird, but we have a massive amount of volume and a massive amount of volume. And if I remove this, this was actually probably bigger at some point. What are the probabilities right now of, it'll get up there, of longing into this low volume node? We have a range. We're accepting higher prices. We're compressing. And it's a whipsaw. It's not a good compression. What are the what's the likelihood that you have a winning trade longing straight into this low volume node when anybody who isn't looking at anything you're looking at is simply looking for a break above this level here to go long to break structure? Your probabilities suck. And that's kind of stuff that I would be putting myself in situations consistently. I would be looking for a fair value gap here to hold and push us higher, and I'd be chasing price down here, not understanding that we are outside of the range and 70% gets traded back into, and you can look for the mean reversion back into this trade here. No way are we getting caught longing into this low volume node, okay? Why do the probabilities suck? Trading this down here. It's all about using this. That's what I'm saying. This trading stuff, it's not one strategy. It's not like you just draw this box and every time we're down here, we're going to short when we break below the zone. We have this under us. So it's literally just like patience. It's like this is not a good area to be taking trades in right here. But when you can find inefficiencies, like we'll see that I took today, there are great setups. And if there's not, then you're not trading it. But yeah, we broke through this range, but we're literally at the bottom of this range. So that would literally be selling low and trying to buy back higher. That's like the opposite of what you want to do. Okay. Okay. Now we're back into that low volume node and we break above it at this point. Look at the strength. This is the kind of basing we want to see. We want to see the basing, okay? We have a P right here. Up, base. We want to continue going higher. We've gotten through this low volume node. There's no longer any sellers right there pushing us down. Where's the long on this? The same way. The same way we have an up move in our basing right here is the same way that on this chart right here we have our up move and we base, retesting the low volume node here. I didn't take this trade yesterday. I was taking my trades on crude oil and whatever because I personally did not want to see this push lower here. What I wanted to see is more of a compression here and take off, and this reversal here. I didn't really like that. But nowhere in this area was I thinking short. I mean, yeah, was I thinking short. It was just gung ho long the entire time. Especially when we get to value area high, we want to be cautious. We don't want to be longing in this area here. Are we at 930? Okay. So at this point right here, not only have we broken out of this range and continued higher, we've gotten through this massive low volume node, okay? When I saw this area here, I was looking for longs anywhere in here. I wanted to see compression in this area, as well as this basing here. Now, if I get rid of all of this and we look where the last fair market value was. We are here and we've entered into fair market value. So this is a mind game and this is definitely discretionary. We found value in this past fair market, okay? This dip down here is the same thing as this fake pop here. It's the same thing. We look like we're basing, and anybody who's not understanding the market structure and how significant it was that we got over this low volume node, we're getting this basing. They're seeing basing below this value area. They think that means that we're going to go short. The same way we had this pop right here that wicked this high and reversed into the zone is the same way I was looking for this to wick and go into the zone, back into the zone. I wanted compression. When I saw this level break here, I went long. When I saw us get tight and close above this level, I added. When I saw us retest this downtrend line, I added. And this now is a smaller range. And are we finding value above it? We're probably going to wick below it. We're probably going to dip below it and return to it. And when I saw that right there, which is the same thing as a pop above here and a reversal into the zone, is the same thing on the smaller time frame. We added more and we were going to let this thing ride. And so if we are looking to trade back into this area, where is a good place to take profit? Probably at the low, because what do we want to do? We want to have probabilities on our side. And what happens if a massive seller wants to keep this value down here to then send us lower? There's nothing I can do about that. So I want to be getting out near this value area low. There's no reason to hold through it higher. I mean, if you're not content with this movement right here, then this ain't for you. I mean, I definitely could have held a runner. I wish I held a runner. But, you know, when I get this last movement, usually it goes in phases. It goes a a range, a push, and then we have sideways, and then a push, and then a choppier sideways. Like this is pretty neat and tidy right here. The other one's a little more violent that may push down, to here to make a higher low. And then we get one more push, and then we just go kind of slow grind up. I don't want to be part of that when I can just get the majority out here. We did go higher, but NQ didn't show any of that. NQ actually, the reason I didn't long NQ is because this gray zone is the same low volume node, and we just completely dumped through it, which is why we didn't really see good action on NQ. This guy, clearly he had no strategy, whatever. He's just just trying to pick reversals, and it's stupid. Look, he's trading a freaking SMT right here. Uh, Claiming he made 46 profit on stream this month. Shut the fuck up. Like, let's go over gold. Well, I didn't take a trade on gold today. Oh, I did take a trade on gold. That's right. We had our range and why I was fine with cutting this loss. Anytime you see this box here, that's a low volume node. If we were going to get some compression and push out of this, I liked the compression and the move higher. I wanted to be part of that. And if we ended up falling through and rejecting off that low volume node, I not only I didn't get stopped out, I made profit on this. Yeah, I mean that's just a trade that you have to take. But the the idea is there. I mean, we had heavy strength coming out of this range. If we can base and go sideways and break through the low volume node, then we'll probably go find value up here, right? So crude oil, Crude oil was a great trade yesterday. This was a continuation of yesterday. Look at this was also a low volume node that we traded, but we had our range. What are we doing? Fading the extremes, getting in, shorting here, riding it down back into value. We wanted to continue below, and then today we're finding value below here. And we were short in this area down to here. Yeah, getting short down here. We have the anchored VWAP. We have uptrend, broke the uptrend. We're going sideways at this point here. We're looking to go from sideways downwards. This was a low volume node. If we can get through that, we'll probably continue lower, which we did. I mean, just being on the right side of the market, does that not make sense? Like, here's fair market value, selling high, buying low, right? We're down here, buying low, selling it back in here. We're not looking to go from here up to here, because really, once you see this, you should start thinking that we're going to be going long. So, Bitcoin had a really good move today. I think I took my range off. We'll just pop in how to show this. So where was yesterday? Yeah. Bitcoin. We had our range. We had came up yesterday. I mean, it's literally just a game at this point. We're below the area. Really looking for a long here would have been good. I don't think there was a low volume node here. I'm gonna just delete that. Maybe there was. Could we continue? We're probably going to continue into the range, but when you get a basing like this, you're supposed to pop to the upside. So if we're going to retest this value area low, see that trapped a lot of traders. We're now expecting shorts, and we get shorts, and that's all she wrote, and Bitcoin dumped. And I think we went sideways for a little bit, but it stemmed off the fact that, yeah, sure, we could totally be reversing back into the range here, but this compression here that failed at the value area low is now showing that we're accepting prices lower. Okay, now why Bitcoin long today was so good is because if the big shorts should have stepped in here. If we're accepting price lower, the big shorts should have stepped in right here. They didn't, and we returned back into value. Okay, strong. And if this gets... I didn't mean to do that. Look at Bitcoin. Bitcoin's very whipsawy. 70%. That's where it trades to. So, the Russell looked really good today. Yeah, I really wanted to get in on that. So, yeah. Fade the extremes when we push lower and find value in new areas. Just like this. We were trading here, mean reversions into this range. Found value up here, broke below the low volume node. Get our compression, move up, move up, move up, and we're not trying to pick reversals. We're not spending our time trying to stop a moving train like this anymore. So as you can see, it didn't even hit take profit for him, and he had to. That's all he got. That's what happens when you're trading reversals. Like, Every pullback is weak. And I think I wasted like 10 years of my life. Or not wasted, but I think I knocked off 10 years of my life stressing over trying to trade stuff like this. Like, so yeah, I feel good. More work to do, but that's how you do it. Peace.